Still on supply and demand and how you can blend it with discount and premium zones. In the last video, I gave you guys a graphical example of how you can trade this concept, and in today's tutorial, I'm going to be explaining on the chart how you can navigate supply and demand and discount and premium zone, like how you can join the two concepts together to trade reasonably. So let's get straight to the chart and let me explain it effectively for you guys. So this is AUDCHF, right? AUDCHF, the 4-hour time frame. So let's just see how, or let's just say the possible trade that we would have had, or the possible trade we can find on this particular pair using supply and demand blended with discount and premium zones. So let's focus on this current structure. Let's say we have this as a break of structure. Oh, let me even go back a little bit to see if I can find anything reasonable. Okay, let's start from here. Let's say we have this as a break of structure to the upside. Sorry, I'm coming. All right, so let's say we have this as a break of structure to the upside. Like I explained to you guys, when we have a break of structure, all you have to do is just to use your Fibonacci tool. Take your Fibonacci to place it from the low that caused the break to the swing high, just like this, right? And then we'll be left with two zones. We'll be left with the zone that is below is called the discount zone, while the zone above is called the premium zone. And the discount zone is where we want to be looking for buys opportunity, while the premium zones is where we should be looking to sell the market if we get a confirmation or an opportunity, right? So let's look at this structure. Let me wipe out, or okay, let me just use a tool that demarcates the zone into two, just like this, and then let me wipe out this Fibonacci tool. Right, so now what are the possible trade setup we can find on this pair? We can find this to be, or we can call this to be, a breaker block level, right? A breaker block level, and this is like a structural liquidity for that breaker block, right? So this is a typical breaker block setup that most traders would have loved to execute, right? But as you can see, this setup was sitting inside the premium zone, and those people that try to buy this market at this level, placing their stop loss at the end of the breaker block or somewhere around here, targeting this high, would have been stopped out, right? Can you see how blending these two concepts together help you to avoid, or help us to avoid, these losses? Now we have another POI here, which is the extreme POI. Although we also have another POI here, let me mark this one out. We also have another breaker block here, right? But you can see this breaker block is overlapping the equilibrium price. This middle line of your Fib tool is the equilibrium price. You don't have to make any trade decision at that level. You can see this breaker block is overlapping the equilibrium price. So those people that executed their trade at this breaker block, so you can see price just gave a little push to the upside and then dump into this extreme order block that is sitting inside the discount price, and from there price pushed to the upside, right? So those that took their entries from this level would have made a whole lot of profits by targeting this external range liquidity, just like this. Can you see how we ignore two losses and we end up winning this particular trade because of what? It is sitting inside the discount level. So it is not you just trading supply and demand, it is you knowing if your demand level is at a discount level and if your supply level is at a premium level. Let's move on to more examples. After this break of structure, we had another break of structure to the upside, just like this. Let me mark this as a break of structure, right? It's a break of structure also. And what can we see here? We can see this extreme order block, just right here. And how do we want to take a trade in this scenario? Take your Fib tool, place it from this low to the high, to the swing high, just like I explained previously, right? From the low that caused this break to the high where price is reversing from. And what can we see here? We can see all of these zones. We have this to be a demand zone that is sitting inside a premium level and price invalidated it. We also have this level that is sitting inside the discount level, and price respected this. Immediately price traded into this zone. We saw it this push to the upside, breaking another structure. Can you see how we ignore this one and we took this one because it is sitting inside the discount price? That is how you basically trade discount and premium zones. I mean, this is how you add the discount and premium zones when you want to execute trade based on demand and supply, right? So moving on, we can see another break of structure just like this. This is like, sorry, this is like another break of structure. We do same thing, right? Just take your Fib2, just take your Fibonacci 2, place it from the low to this swing high. Now, so many persons might also call this a break of structure, which is right? This is also a break of structure, but this is a minor break of structure, so we don't count this as major break of structure when we are marking major swing highs and swing low. This is a swing low and a swing high. So this small break of structure is just a minor break of structure. So this overall push to the upside is like a swing leg on the daily time frame. So the zone below here is our discount, while the zone above is our premium level. So many persons might have want to or might have taken a trade at this level, which is sitting inside the premium zone. As you can see, price just tank all the way down to take them out, and then traded into this discount level that has this other block, and then we saw this push to the upside. We also had like some confirmations entry here, like this is the last break of structure. Price took out this high, gave us this other block just right here. As you can see, this other block, and it mitigated, and you can just have your entry just right here. Like I said, discount prices are levels, or discount levels are levels where you are looking forward to buy the market. You might not want to go aggressive, you might want to wait for confirmation. So this is a typical confirmation entry for this type of setup, right? You can target this high, close at 1:3 or whatever where you want to target. So let me just give another bearish example and I'll end this video. And if you want to trade like me, if you want to trade the way I trade, if you want to take my setup, you can click the link in my bio to join my community. I always share all my setup for free. You can learn from the free marketing site and everything, right? So the link is in bio and I will catch you there.